All right, let's talk about something huge that's happening right under our noses. Forget all the noise about meme coins and the crazy market swings for a second. There's a quiet revolution going on. The biggest names in finance, they're not just playing around with blockchain anymore. They are literally building its new foundations. Today, we're going to pull back the curtain on what might be the biggest shift in finance in our lifetime, turning real-world assets into digital tokens.
And this, right here, this is the central question we all need to be asking. When you see a company like BlackRock, they're the largest asset manager on the entire planet, a true pillar of old-school finance. When they start putting something as fundamental as U.S. Treasuries on a blockchain, you have to stop and ask, why? This isn't just a random bet. This is about building new infrastructure.
You see, they're not really speculating on the future of money. They're actually building the future of markets. They're taking the safest, most boring, most trusted assets in the world, we're talking government bonds, gold, and moving them onto brand new digital rails. So in this explainer, we're going to break down exactly what they're up to, how this whole thing works, and most importantly, what it means for the future of your money.
So here's how we're going to break it all down. First, we'll look at this big institutional wave led by firms like BlackRock. Then, we'll get into the core tech making it all happen, tokenization. After that, and this is crucial, we'll dive into the difference between two types of digital assets. Then, we'll get real about the brutal truth of the risks involved. And finally, we'll look at what this new financial reality could actually mean for you.
Okay, let's dive right in. For years, crypto's whole story was about wild speculation, right? Moonshots and crazy bets. But that whole narrative is changing. We're in a new phase now, and it's all about utility and infrastructure. Wall Street isn't gambling anymore, it's building.
What we're witnessing is this massive strategic pivot. The giants of finance are off the sidelines. They are actively turning some of the most, boringly stable assets you can imagine into tokens. So why bother? Well, because our current system is shockingly slow. When you buy a stock today, it can take 2 full days for that transaction to actually settle. Your cash is just stuck in limbo. By putting these assets on a blockchain, they can settle a trade instantly, 24/7, 365 days a year. This unlocks potentially trillions of dollars in liquidity and just makes for a way more efficient global market.
And please make no mistake, this is not some tiny little experiment. The value of these real-world assets, or RWAs, on the blockchain is expected to blow past $35 billion by 2026. So yeah, this isn't some niche hobby anymore. It's quickly becoming a fundamental piece of the financial system of the future.
So how does all this magic actually work? To really get what's happening, you have to understand the core technology. And it all boils down to one simple but powerful word: tokenization. Tokenization is actually pretty straightforward. It's just the process of creating a digital proof of ownership for a real-world thing and putting it on a blockchain. Think of it like this. You have a physical paper deed for your house, right? Or maybe a paper stock certificate. A token is just a super secure digital version of that certificate and is logged on a public ledger that can't be changed. It basically turns something clunky and physical into something digital and super fluid.
And this is where it gets really mind-blowing. This side-by-side comparison shows you just how big of an upgrade we're talking about. We go from a world where markets are only open 9 to 5 and trades take days, to a world that literally never sleeps. Your assets aren't just sitting there tied up, waiting for some bank to clear a transaction. Nope, they can be traded or used as collateral in an instant. This cuts out a ton of middlemen, making the whole system way faster, way cheaper, and way more transparent.
Okay, but here's where we need to get a little technical, because this is super, super important. Not all of these tokens are made the same way. There's a huge difference in how they're structured, and it has massive implications for what you actually own and the risks you're taking. It's basically the difference between holding an IOU for something and holding the real thing itself.
So the first model is what we call a wrapped asset. Think of a stablecoin like USDC. For every single one of those digital dollar tokens out there, there's supposed to be a real US dollar sitting in a bank account somewhere. The token you're holding, it's just a claim ticket. It's an IOU. You are trusting that central company to actually have the dollar and to give it to you if you ever want to cash out your token. And now we get to the true revolution. This is the endgame for tokenization, a natively issued asset. In this world, there is no dollar sitting in a vault somewhere else. The token is the asset. It is the direct legal title. The proof of who owns it exists right there on the blockchain, and it's enforced by the network's code. This completely vaporizes the risk of relying on a central company. This is where Wall Street is heading.
Now, this all sounds incredibly powerful, and it absolutely is. But with great power comes a completely new type of risk. And to really understand this space, you have to face the downside head-on. In the world of blockchain, a tech bug isn't just an inconvenience. It can mean a total, permanent, irreversible loss of everything.
And this right here is the brutal truth of assets that live on-chain. In the old system, if something goes wrong, you can call a lawyer, go to court, appeal to a regulator. On a blockchain, the code that runs the whole show, the smart contract, is the final judge, jury, and executioner. If a hacker finds one tiny flaw in that code, they can exploit it and drain every penny. And because these transactions can't be reversed, there's usually no way to get it back. Your digital gold, your tokenized bond, it can literally just vanish into thin air.
And trust me, this is not some theoretical boogeyman risk. In 2023, a well-known project called Balancer lost $128 million. Why? Because of a single bug in their smart contract code. It's a pretty stark reminder that just because something is decentralized doesn't mean it's risk-free. The security of that code is everything.
So really, you're fighting a war on 3 different fronts here. First, there's the smart contract risk we just talked about. Second is private key risk. In this new world, you are your own bank. Your assets are protected by a master password called a seed phrase. If you lose that phrase, your assets are gone, forever. There is no "I forgot my password" button. And third, you've got regulatory risk. This is all brand new, and governments are still trying to figure it all out. The rules could change overnight, and that creates a ton of uncertainty.
Okay, so we've covered the tech, we've covered the very real risks. Now, let's bring it all home. Let's see how this could actually change the way you save and invest your own money.
This is what it looks like in the real world. Imagine this dashboard and your digital wallet on your phone. Instead of having dollars sitting in a bank earning, practically nothing, you hold a tokenized US Treasury note. It's just as safe as a dollar, but it's earning you a real competitive yield. You own it directly, you can access it 24/7, and you can send it to anyone anywhere in the world in seconds. This is the whole promise, making the safety and yield of top-tier financial assets available to everyone.
So let's wrap this all up. What are the big takeaways? First, the future isn't about crypto replacing finance. It's a hybrid, upgrading the old system with these new blockchain rails. Second, the big opportunity, the alpha, is shifting away from meme coins and towards these tokenized, real assets that actually pay you a yield. Third, the upgrade here is huge. More efficiency, 24/7 markets, the whole shebang. But finally, never ever forget the warning. The risks are very real, and security and taking responsibility for your own assets are absolutely everything.
And this really brings us to our final thought. We're standing right on the edge of a world where basically every asset can be a token on a global network. Your stocks, the deed to your house, maybe even a tiny piece of a famous work of art. When everything you own becomes instantly programmable and tradable, what does that do to the very idea of ownership itself? That's the huge question we're all going to be answering in the years ahead.